It was October 2001 when the world learned that Enron Corporation, once a titan in the energy industry, had filed for bankruptcy. The scandal cost investors around $74 billion. The name Enron became synonymous with betrayal and corporate greed, a tale of financial manipulation that brought down one of America's largest corporations and shattered countless lives in the process. Enron, founded in 1985 by Kenneth Lay, was initially a modest pipeline company. Lay, born in Tyrone, Missouri, was a son of a Baptist preacher. He pursued economics, earning a PhD from the University of Houston. Lay's journey from a humble background to the heights of corporate America was marked by ambition and a vision to revolutionize the energy market. By merging Houston Natural Gas and InterNorth, he created Enron, laying the groundwork for what many believed would be an unstoppable force in the energy sector. Lay's charisma and strategic acumen quickly garnered attention and admiration from investors and industry experts alike. The company rapidly became a Wall Street darling, known for its innovative trading model, Enron Online. Launched in November 1999, it was the world's first web-based commodities trading platform. This innovation, combined with charismatic leadership, captured the imagination of investors and analysts alike. Enron stock soared, and by the end of 2000, it was trading at an all-time high of $90.75. Executives, including CEO Jeffrey Skilling, became celebrities in their own right, living in opulence, fueled by the market's immense faith in their vision. Skilling, a Harvard MBA graduate, was pivotal in transforming Enron's business model from a traditional energy company to a cutting-edge trading giant. His aggressive strategies and confident demeanor made him a poster child of the new economy. Enron's first taste of true success came in 1996 when the company announced a staggering $105 billion in revenues, bolstered by aggressive investment in new markets. The media hailed them as the face of the new economy. The company's headquarters in Houston stood as a shining emblem of prosperity, complete with lavish offices and flourishing employee benefits. However, the pressure to maintain and exceed expectations led to increasingly risky financial maneuvers. Still, the allure of Enron's success was undeniable, as employees and investors alike were swept up in the fervor of its rise. But behind this facade of success lurked a sinister reality. The cracks began to show in March 2001 when Bethany McLean, a journalist from Fortune magazine, asked a seemingly innocent question. How does Enron make its money? The company's complex financial statements provided little clarity, a deliberate opacity. Her article painted a picture of a company whose profits were based more on creative accounting than genuine earnings. McLean's inquiry set off alarm bells within financial circles, prompting deeper scrutiny into Enron's operations. The article was a catalyst, challenging the narrative of Enron's invincibility and revealing a vulnerability that had been expertly hidden. In summer 2001, Jeffrey Skilling made a fateful decision. Against internal advice, he chose to continue hiding colossal debts in off-balance sheet entities, named after Star Wars characters no less. These were the infamous special purpose entities that would later become symbolic of Enron's deception. These entities, with names like Jedi and Chuko, were part of a complex web designed to keep debt off Enron's books and inflate profits. Allegedly, when some employees questioned these practices, their concerns were hushed, suppressed. The culture of fear and silence within Enron prevented many from speaking out, as the pressure to maintain the company's image and stock price was immense. Then came October 16, 2001, the day Enron announced a $618 million third-quarter loss and a $1.2 billion reduction in shareholder equity. The Securities and Exchange Commission opened an investigation. The media frenzy was instantaneous. Enron's downfall became the defining corporate scandal of the early 21st century. A week later, the stock had plummeted to less than $1. As the investigation unfolded, it became clear that Enron's financial practices were not just aggressive, but fraudulent. The fallout was swift and brutal as the company's reputation crumbled and its market value evaporated almost overnight. Legal retribution was swift and devastating. Kenneth Lay and Jeffrey Skilling faced multiple charges, including fraud and insider trading. Skilling received a 24-year sentence. Lay faced trial but passed away in 2006 before sentencing. His death left questions unanswered, justice half-served. The trials captivated the nation as details of Enron's internal workings were laid bare in courtrooms. The testimonies of former executives and employees painted a picture of a company driven by ambition, but ultimately undone by its own hubris. The legal proceedings were a stark reminder of the consequences of corporate malfeasance and the importance of accountability. In the wake of Enron's collapse, thousands of employees lost their jobs and life savings, trapped by the company's encouragement to invest retirement plans in Enron stock. Stories of ruined retirements and devastated families emerged, a stark reminder of the human cost of corporate malfeasance. Employees who had dedicated years of their lives to the company found themselves with nothing as their pensions and savings were wiped out. The impact on the community extended beyond financial loss, as the collapse of Enron led to widespread disillusionment and a loss of trust in corporate institutions. Enron's tale is a cautionary story of unchecked power and the illusion of invincibility. It's a reminder that beneath the surface of every glittering corporate success story, there could be shadows. Shadows of greed and deception that can unravel everything. The single most important lesson: transparency and ethics must remain paramount in business, for without them, even the mightiest fall. The legacy of Enron serves as a constant reminder of the need for vigilance, integrity, and accountability in the corporate world. As businesses strive for success, the story of Enron stands as a testament to the potential consequences of losing sight of these essential values. If this stayed with you, like the video, subscribe for what comes next, turn on notifications so you don't miss it, and tell me what you think. I read everything.